If the growth is not more than 10%, it's not an investment, it's a charity.
Do you think in the long term, Tasmania would endeavor to continue to give capital growth and cash flow at the same time?
What our value proposition is, we'll buy the asset for you and we'll get the investors 8% yield.
You said 2 weeks. Great. So fully furnished style properties live. Is that even possible? Is it 2 weeks?
That's why I keep on saying residential assets, commercial returns. In a nutshell, Jasper Advocacy provides a solution for both capital growth and cash flow. If I compare myself with the other buyers advocacies, they buy you the property, as soon as it goes unconditional, they invoice you the success fee, and they're no longer...
They're done.
Whereas what we do, we buy the property for the investors, we design the property, we furnish the property, and then we run it end to end for them.
Yeah. So someone who appoints you, they are getting someone who is actually run for themselves.
So I'm positively geared before taxes, and I'm more positively geared after taxes. I bought my first property in Tassie, in Hobart, when I got my permanent residency. I bought it for $388,000. Today, that property is worth $750,000. But that decision will be backed by the research.
Yeah, so let's get into it. Gary, let's start with a question before you introduce yourself.
Yep.
If I handed you $700,000 today and I ask you for two things, cash flow rich property and it has to grow, which means capital growth, what are you going to do with my money?
Thanks, Nidhi. Thanks for having me. I'll buy your property in a strong growth corridor where we're going to see a lot of capital growth, which is what we target, 10% capital growth. And that property will be positively geared, which means the yield on that property will be 8%.
And how?
Well, I'm not going to open up my cards at the start. You just got to wait till the end and you'll find it out.
Hi guys, this is Nidhi from Jasper Advocacy and I've got Gary with me. Today we are going to talk all about our strategy, which is cash flow rich properties through short-term rental strategy, which is leveraging platforms like Airbnb, Booking.com, so on and so forth. And here we're going to talk all about what an end-to-end process looks like at Jasper Advocacy, and we'll jump straight into it. I'll let Gary introduce himself.
Gary, my name is Gary Palmer. I run this business, Jasper Advocacy, alongside Nidhi and other team members. I've been in the business for almost 2 years. I've been Airbnb host before, and we've been in the last financial years we have bought 50 plus properties for our investors, capital growth, cash flow, residential assets, commercial returns. So we've delivered great returns, and we're just going to talk more about our strategy, how it works, and how the returns look like, and just have a listen, and we'll go from there.
That's exciting. Okay, so let's get into it. If for someone who doesn't know you, and if you were to introduce Jasper Advocacy in one line, what do we do? What would that be?
Basically, how I see this, Nidhi, is investors have two problems in investing. They have to they invest their capital because they want capital growth. They want their money to be doubled in the years to come.
Yeah.
And the second thing is how they're going to sustain that investment, which is the cash flow. In a nutshell, Jasper Advocacy provides a solution for both capital growth and cash flow. So in a nutshell, to answer this, so we buy residential assets and we get you the commercial returns.
Wow. Good to hear. And why short-term rental over a long-term rental?
Look, the traditional renting in itself is really hard, especially after the May 12th budget. It's basically it's not really an option anymore. For example, if you buy an asset of $700,000, established house, and you borrow the money 100% at 6.5% or 7%, so your interest payments are about $50,000. And your rent's not going to cover the mortgage. Negative gearing is no longer an option. So what would you do? So you are losing, even if you pay 10%, 20% deposit, you're easily losing about $20,000 net year on year. I know you can claim against your capital gain taxes when you liquidate your asset, but how are you going to sustain it? If the growth is not there, if the growth is not more than 10%, it's not an investment, it's a charity. That's why I personally believe you need a cash flow property. You need a positively gated property, and that's why I prefer Airbnb over a traditional renting. You cannot turn every house into an Airbnb.
Definitely.
So we buy properties, we source properties where we can convert them into a short-term rental, list them on all the platforms, and then leverage that 8% yield. That takes care of the holding cost, and you just let your asset leverage against the value of the asset.
So for our young audiences, you would summarize it in a manner that the investment leaves you some money in their pocket even after they have paid their mortgage.
100%. So, for example, what we promise, what our value proposition is, we'll buy the asset for you and we'll get the investors 8% yield. And the 8% yield, we'll talk more about it. The 8% yield after all the expenses, which is the management, cleaning, etc. So 8% yield on $700,000 is $56,000. So when you pay your all expenses, and in this current interest rate environment, that will leave you about $5,000 to $10,000 in your pocket.
Yeah.
Which doesn't happen. So that's why I keep on saying residential assets, commercial returns.
Now, a question that you must have heard from all our current investors. You have done this for yourself for years now. So how does that change things when you pick property for a client? A question that you answer probably every day.
Yes, absolutely. And I think that's where a lot of our clients relate to it. Look, I'm 32 years old. I was working in a corporate job before, working for the Victorian government and the Tasmanian government before, because I lived in Tassie for 10 years. And first I converted, my own investment alongside with my wife to an Airbnb.
Yeah.
And the rest is a history. So we had this house where we invested a lot of money. It was like a dream home at the time. We bought it for 800 plus. And when we left the state, Tasmania, moved to Melbourne, we thought, it's not going to cover the mortgage if you put it on a long-term rental. And that's how we started our business, alongside you and other team members. So now when I pick properties for my investors, my main goal is how I'm going to get them maximum return on investment, right? So with our model Airbnb, we're going to take care of the holding costs, and we're going to buy in a growth corridor where we're going to see double-digit capital growth. And there are so many fundamentals to it.
100%. Yeah.
A good quality asset on a good street in a good suburb, solid house where the demand is. So yeah.
A lot more filters.
Absolutely.
100%. I agree. So someone who appoints you, they are getting someone who is actually run for themselves, from what I hear. And why does that matter so much in this space?
It's a really good question, and it's a trust thing as well.
Yeah.
So if I compare myself with the other buyers advocacies, they buy you the property, as soon as it goes unconditional, they invoice you the success fee, and they're
done.
So, yeah, pretty much. They're no longer responsible for your asset. Whereas what we do, we buy the property for the investors, then we design the property, we furnish the property, and then we run it end to end for them.
Yeah.
Which means they don't have to do anything. They can just sit at their home and do nothing basically, and we will take care of end to end. So we got a skin in the game basically, right? So we got a buyer's advocacy and we got a management company. So buyer's advocacy is taking care of finding them the right investment, but the management company has to run.
Yeah.
And we're not going to take on any property which is not going to make money for us. So our interests are very much aligned.
Yeah.
We want that property to make $100,000. So that's what makes us different.
I think in the competitive market, it's more about holding ourselves accountable for what we are quoting to the clients on day one. And I think having a management definitely keeps us accountable for way more longer than any standard buyer's advocacy, I would say. Yeah. So thanks for giving me a brief of how does the process look like, because I think we have touched into that. We've also got a property management angle. So if I hire you as my buyer's advocate, are you able to give me a quick rundown of how my end-to-end process looks like? Because do I have to go through your property management, and what sort of support do I feel with the transition? And how does the ongoing process looks like for an investor when they come to you first?
Yeah, look, the first thing we do is, as soon as anyone contacts us, whether, they leave their contact details on our paid ads on Facebook or, once they contact us, we'll give them a call, we'll have a discovery call. We'll try to find out what are they trying to achieve from their investment. So either me or you or team members, one of us will be in touch. That's short and sharp 15 minutes where we are qualifying each other.
Yeah.
Right? It's not only that I want to work with you, it's the customers as well, whether they want to work with us. Yeah, we'll shortlist that and, we'll share our value proposition. And then the next step is getting them into a 30 minutes or 40 minutes strategy session where we do the strategy for them. Because I personally believe every investment is different. One would work for me and the other one, that same asset may not work for you. Because of your financial situation, right? Because your personal life, I don't know where where the customer is and where they want to be. So once I have that understanding, we do the strategy for them, we do the numbers, and we show them, like in 5 years, this is where you will be.
Yeah.
With this model,
which is important. They need to know where they are heading to.
100%.
Yeah.
So we show them the projections, and once they're comfortable, they come on board, and that's where the real work starts. As you know, we send the brief out to a real estate agent, to get the off-market properties, to get listings online, to reach out our network. Basically, this is the brief we have signed for, and this is what we're looking for. And once we start shortlisting property, we do all our due diligence, council reports, growth history, how's the asset, which street. And once it makes sense for us, once it passes our due diligence, we put it in front of the investor. So the way I say to my investors or to my clients, I say, you are the CEO. I'm going to go and do the hard yards. I'm going to find you everything. I'm going to put it on a plate, and I'm going to let you make that decision.
Yeah.
But that decision will be backed by the research.
Yeah.
Right. And yes, so just to add on, like how they're going to make that decision. For example, if there are renovations involved, they won't have any issues. They won't have to do any guesswork before they're making an offer, because when we shortlist a property and we present it to the investor, they will know how much is the rough estimate for the renovation works. And we will figure that out before we make an offer.
Yeah. By making the quotes and stuff? Okay, sure.
Yeah. So we'll send a renovation team out. We have bought so many properties. We have done so many renovations. So from an experience, we'll pull out estimated COID plus minus 10%, which is, I think, quite obvious.
Course, a standard, yeah.
So we'll put it on a plate. We'll give it to the investors, and then they will make a decision. And once they make a decision, then we'll negotiate it for them. Right. The another thing that I'm very personally proud of, and I see it every day of the week. So we don't buy any asset emotionally. We keep the emotions out of it. Right.
Yeah.
For example, if any of the investors making an offer on any property for 720, and then the real estate agent is trying to get it to 750, but we have a bracket that we stick to when we shortlist the property. We'll start the negotiation here. We'll stop it here.
Yeah.
If you don't get it within this bracket, we are out of it.
Yeah, I understand. Because the whole point I think we are able to get at is that we have to make the property positively geared. And of course, we cannot just overprice it. Like, we cannot go for a higher price, because that does not just get you positive returns in your pocket, which is the whole point, which is the whole value proposition. Great.
Yeah, exactly. I mean, you don't want to overcapitalize it.
Yeah.
Right. There is so much data available these days. So you want to look at, what's the bank valuation, whether we getting it to the property at the right time, because capital growth is the main goal.
100%.
Yeah. Cash flow is
like. We don't have to forget that.
Cash flow is like oxygen, which will keep you floating in the game
and keep your confidence on. Yeah, you do not want to get your morale down just because the property is not making money or not leaving any money in your pocket. Yeah, 100%. Yeah. Now, let's get into where we get the skin in the game, and we have touched on it, property management side of things. So you said that as a model we have got property management in-house as well. So let's talk about it. So we are not just finding a property, we are styling it, furnishing it, managing it. So why do the whole thing instead of just handling the keys? Like why do you think it makes a difference in the investor's mindset that we could have easily just walked off by handing over the keys to them, and it's upon their discretion what do they really want to do with the property? Do you think by having an in-house property management, one, of course, we said that we are holding ourselves accountable for the kind of returns we want to be able to get to the investors, but do you think it makes more much of a difference with this model?
Yes, absolutely. Because it's end-to-end service, right? And all our, most of our investors are some of our business people, some of working in the corporate jobs. They don't have time to figure out themselves how to do things. So, short story, when we started this business, I was already managing my properties, which are on Airbnb.
Yeah.
3 of my properties are on Airbnb. So, I had a good experience managing those properties and get to the speed where they were performing exceptionally. And when we started speaking to the clients, the feedback was, it's good that you will buy me a property, but how I'm going to trust the person, the second company or whosoever is going to manage it, they will commit to what the promises are.
Yeah.
And that got us thinking. Then I was like, we have to figure out something. That's where we bite a bullet.
Yeah.
We invested so much money into this sister company, which is a management company. And we hired a lot of people. We trained a lot of staff. Now we have a well-oiled machine, which is running the management side of the business. So that's when, we started the management side of things as well. And that helped us in the conversion of the buyer's advocacy as well. Now people trust us. They know once we buy the property, they're not going to go away. And again, as we mentioned at the start, skin in the game. Now I need this management company to sustain. So we won't buy anything that won't make money for us in the management company. Because management companies got their bills to pay. Staff wages, insurances, any cost that we need to run the business. So so that's how we started. And now we buy the property for the investors. We got a team who designed the property before the settlement, furnishes it within the 2 weeks of settlement, and then launch it on Airbnb. And then you just get paid third of each month as an investor.
Yeah, good. And the way I think is it's very easy for a client to just speak to one person from the start to forever, like until the life of the property, until they hold that property and they have never like until they sell it. So which is very good from the investor lens as well. Like they don't have to transition between first the buyer's advocacy and then the property management company. They know that this is the person they speak to while procuring the property and while managing it. And of course, because we promise them the kind of returns we are going to deliver, so we have to make sure that we are holding ourselves accountable to them for the life of the property. Great.
Exactly. Yeah. No, I totally agree. And once they come on board from the journey, they speak to me and I take care of them end to end.
Yeah.
We have our team members who they come and go, a buyer's advocacy team, our designing team, a furnishing team.
But then one person makes a difference. Like this is the one person who can liaise with all the other individuals of the team. Like I know it's a team effort. It's like it's a team effort. A lot goes behind the scene, and who would know better than us? So nice. Yeah. You said 2 weeks. Great. So fully furnished style properties live. Is that even possible? Like, is it 2 weeks?
Yes, 100%. We have furnished in our portfolio. We have about 30 plus properties right now. And as we speak, we are getting furnished. We're furnishing about 10 more properties. And before end of this calendar year, we'll have 50 properties in our portfolio. 2 weeks is the time frame which we have cut it to. And there is a reason. Like, if it's my property, I don't want to keep it vacant for long, right? Because I'll still have to pay the bills, interest payments,
holding
council
cost.
payments. Yes, holding costs, exactly. So that's the timeline we dedicatedly work on. And there is so much mechanism and there is so much goes behind to it.
Yeah, of course.
To get to furnish within 2 weeks of the settlement. And what is it? We as soon as the property goes unconditional, we do the designing part, which is pretty easy in this day and age using the AIs and all that jazz. Pretty easy. And then the biggest challenge which I see is procuring the furniture, because we are in Australia, right? Doesn't matter whether you're in Hobart, whether you're in Melbourne, things do take time. So our team makes sure we have furniture available for the style of furniture we want when we're going to launch the property. So we have a container houses there where we store our furniture. We have trades on ground who takes care of the delivery. We make sure stock is available. And then as soon as we get the keys, cleaning team goes in, they clean the house. Then our tradies goes in, they set it up. And then our property manager, Sam, who's a superstar, she goes in, she gets it done, takes the photos and put it on Marketplace.
Yeah.
That's it.
So once the client has got the pair of their keys, we've got 2 weeks, the property is styled, furnished, like everything is assembled, put together, and the property is live on Airbnb.
2 weeks. 2 weeks that it all takes, and that's the model we have created for our investors.
Yeah, it's great because we have to put the trades together, style it, furnish it once again. Yeah, it's a job in itself.
It's a big job.
Yeah.
And you wouldn't be able to do it yourself, right? It's not everyone's job, but because we are end-to-end services for our investors, we have created this model.
Yeah.
Where we're going to buy the property for you. I'm going to be repetitive, so sorry about that. You're going to buy the property, we're going to design it, we're going to furnish it, and then we're going to launch it on Airbnb.
And just hand over the cash flow to the investors every month.
Yeah.
That's it.
And you've seen the messages coming, Nidhi.
Yeah.
People call us. They are in our WhatsApp community. They are in our WhatsApp group. When they see their property is making $5,000 a month.
Yeah.
And they couldn't even believe, right? They couldn't even believe. And people have come back to us and said, is it going to be consistent?
Yeah.
Is it actually real?
Yeah.
Isn't it? You have seen this in your...
I have seen it, and I'm going to tell you a funny story. So I'm not sure if you remember, but I posted one of the contents in my first week, which was actually behind the idea of this investor messaging us, and we were all feeling very happy in the office, but I thought it's a good piece of content, so hence I made it. And the investor was like, look, I've got this money, and he was really happy. He was amazed. But the funny question he asked was like, is it going to be consistent? And is he going to get such cash flow every month? Like, is this normal? And we were all feeling happy, and the feeling of contentment within us, like that's the kind of results we are able to deliver to the investors, which was very exciting. And the investor I'm not sure if you remember, but the investor we are talking about here is a seasoned investor.
Yes.
And for such an investor to say that it is normal, I got to feel that from his other investments, he's not getting that cash flow.
Yeah.
And hence why he's maybe amazed or surprised, and he's checking with us if it's normal and if it's going to be consistent. So, which is a feeling of pride in itself, I would say.
Yeah, no, exactly. It takes a lot of things goes behind it. But that's the model we have created for our people, for our clients, for our investors, where they don't have to pay anything out of their pocket.
Yeah. And one-stop shop.
One-stop shop.
Yeah, great. We call ourselves one-stop shop. Do you think, is there anyone else in the market at this price, of course, who is doing such sort of offering, who have got such sort of offering? One-stop shop?
I haven't seen anyone.
Yeah.
I haven't seen anyone.
Yeah.
I don't see any competitors in the market. This is a unique model which exists, and a lot of people have reached out to us. So in the last financial years, in the 50 transactions, 7 transactions out of those 50 transactions were the buyer's agents. Can you believe it? They reached out to us when they saw our ads, and it's a no-brainer.
Wow.
It's absolutely a no-brainer.
Yeah, and I think that's a feeling, and that's success. Like this is like and this is what we are here for. Like buyers advocates come with a big experience. They are living and breathing property day in and day out, and when they are reaching out to you for their own investments, that speaks in itself. Like we must be doing something, one, of value, and second, that people do want to explore more.
Yeah, exactly right. So 7 transactions in the last financial years out of 50 transactions that we did were the buyer's agents.
Yeah, that's a win.
And we bought them a property, we designed it, furnished it, now they're actively or successfully running on Airbnb, and they just love the model. So so if our colleagues or if our buyers agents being our customers, you can tell how solid the offering
exactly.
is, how solid the product is, what we are doing.
100%. Yeah. Good warm up, Gary. Now let's get into a question that you're answering 50 times a day. So let's hear your script again.
All right, bring it on.
Why Tasmania? Everyone's chasing Brisbane, Perth, Adelaide. You send people to Tasmania. Why?
Look, first, I'm going to say I love the state. That's my personal attachment to it. I lived in Tassie for 10 years.
Yeah.
And a lot of people have heard me saying this again and again. So that's my personal attachment to the place. But
what value does it bring to the investors?
Yeah, exactly. And that's my personal attachment. But why I am selling Tasmania to my investors, the fundamentals, right? When we look at the data, what do we look at? We look at the demand versus supply. We look at the vacancy rate. We look at the migration. We look at the new builds construction approval. They all are in green. Like, for example, for demand versus supply, there are not enough houses. There are like thousands of people are on the list on Homes Tasmania. They don't have a place to live.
Yeah.
Right? It means there is enough demand, but there's not enough supply.
Yeah.
The second thing is the vacancy rate. It's 0.4%.
Yeah.
It's just deadly low. There's no stock, which continuously going to push the prices up.
Yeah.
The third thing is the affordability, right? Hobart is the last capital city in Australia, or maybe the second last. Darwin could be another one. I'll have to check. It's one of the last capital city in Australia where you can actually get a stock within $750,000.
Yeah, and I think that's the median.
About that.
Close to 800-ish, yeah.
Yeah. Otherwise, if you go to Brisbane, you go to Sydney, you go to Perth, every city has been touching $1 million.
Yeah.
So, and then within $750,000 bracket, you can buy a quality asset. And what I mean by quality asset is a good land size, 600 to 700 square meter, a good house with good bones, 3-bedroom, 1 bath, 3-bed, 3-bath. And also that land parcel will have legs where you can put a granny flat down the lane. Strata dwelling, you can build at the back. So these are the reasons, I push people to Tasmania. And the second thing is the projection. So there is a lot of investment happening in Tassie right now. So Tasmania's got a population of about 550. And once we start sending, once we have more migration, then there's more pressure on the housing.
Yeah.
There's a new stadium getting built. There's a lot of infrastructure and investment happening. Hobart airport upgrades. They've upgraded the runways and the terminal itself. So there's a lot happening. And after that, if you layer our model, which is the Airbnb, and that generates the positive cash flow, then it's a no-brainer.
Yeah. Do you think there are factors that are consistently contributing to low vacancy rate? Because we keep hearing that vacancy rate is very low in Tasmania, and I think that's what a lot of other property enthusiasts are also feeling and saying day in and day out. So do you think migration is one of those reasons? Like, because I'm an immigrant and I've been hearing for a good 9 years now, people are going to Tasmania and trying to settle in there. And I've also seen whoever goes never come back. Yeah. And it's like a lot of our investors as well who are now saying that they want to permanently live in Tasmania now. That's one of the reasons they fall in love with the state in itself. It's a nice and small.
It's beautiful.
It is.
It's the beautiful part of the world. And to answer your question, migration is definitely one part to it. And the biggest most is the supply. Because we have to look at this way. Tasmania is an island. So we cannot say in Tassie that tomorrow I'm going to build 1,000 homes within the next 2 years. It just cannot happen. And why it cannot happen? Because it's an island, right? There are only limited players in the market who can actually build those houses. If you try to bring someone from interstate, the numbers don't add up. So you have to live with the local builders, the local construction companies who can actually build houses, and they can only build so many. So even if you want to build 1,000 homes, it's not practical. And there's still a lot of gap in supply and demand.
Yeah, I was just going to get that. There's definitely a supply and demand gap there. Great, exciting, nice. We just spoke about how great Tasmania is, and a lot of our investors, we keep hearing day in and day out that they want to move to Tasmania, and that's because they've fallen in love with the state. But I would say that there is still misinformation or a perception that Tasmania is small and slow. So have you seen capital growth there, and what do you back it with going forward?
I'll just tell you a funny joke. When I moved to Melbourne, a lot of people ask me, "Do you guys use Australian dollars in Tassie?" So that's like it's a lot of people don't even know that Tassie exists, right? But if you look at the data itself, in the last 20 years, Tasmania is on top of the list in terms of the capital growth. Regional Tasmania, Hobart, Launceston, Burnie, Devonport, they have outperformed states like Victoria or even New South Wales. So so that's what that's what's happening. And from my own personal experience, Nidhi, I started investing in 2020. I bought my first property in Tassie, in Hobart, when I got my permanent residency. I bought it for $388,000. Today, that property is worth $750,000.
Wow.
So it's almost doubled in less than 6 years.
Yeah.
So that's the living proof. That's the proof I can share it with you.
Yeah. So you've got something to back it.
100%.
Great. And I think by now I know the answer to it, but normally, and this is I come with a lot of reading and information podcasts about property. Normally it's either cash flow or growth. You have to pick one. So you are saying Tasmania gives both, and I understand because we have got a demand and supply gap there. But yeah, do you think in the long term Tasmania would endeavor to actually still continue to give capital growth and cash flow at the same time?
Yeah. I absolutely see that happening. And in the last 12 months, all the properties which we have bought, our investors have made minimum 17% capital growth in less than 12 months.
Wow.
Which is amazing, right? And then cash flow is on the top. And why we are stacking up our Airbnb model or short-term rental in Hobart? Because 11% of the economy comes out of tourism.
Yeah.
So, 1% out of 6 works in hospitality sector, indirectly or directly. So that's the proof. And Tasmania has been left out for long. And the reason I say this, everyone wants to visit to Tassie because it's beautiful. In the last few years, every start of the calendar year, Tasmania comes in the top 50 places to visit in the New York Times. But people are not able to get to Tassie because it's bloody expensive, right? Getting a flight, it's expensive. Getting on a ferry is expensive. Accommodation is expensive. People would prefer spending that money. They would go overseas within the same cost. But now things have changed in the last few years. So now the government has come to the party. They are investing a lot of money into the infrastructure, which I spoke about, which is the airport.
Yeah.
For example, they have already invested $135 million into the runways, just to the runways, so that they can land bigger aircrafts, right? So the investors have invested their money, but they haven't started yielding the results yet. So they're still negotiating with Singapore Airlines, Cathay Pacific, so that they can have direct flight from Singapore or Hong Kong or China. And imagine once that starts, it's just going to disrupt the industry.
Yeah.
Which is what happened in Keynes. When Keynes started having direct flight from the Asian countries, it's just gone mad in terms of tourism, in terms of property values. everything.
Yeah.
So so there's a lot happening. The government has invested money into the Hoibar airport. There are new ferries so that you can bring your vehicle. There are new hotels are on the go as well. So they want the tourism to grow
grow.
and sustain.
Yeah. So that's actually a number of significant factors that's driving the demand down there.
Yes, exactly
Yeah.
right. Yeah.
Yeah. Of course, growth is a byproduct then.
Mm-hmm.
Yeah. Let's jump into strategies. So we gave a quick rundown to the viewers that this is a strategy. They get up, they come to us. We help them with the strategy. We find them a good property which is both cash flow rich, positively geared, and of course has a capital growth potential, which is significant to us and the investors. So what sort of strategies have we got in here? Like, is it just a clean purchase that we buy and set it up on Airbnb and then manage it? Or if you want to just touch base on different strategies that we have got at Jasper.
Yep. So basically, you want me to do a strategy session in 5 minutes. You want me
Quick one.
Quick one. Yes. Yeah. So we have 4 strategies. The first strategy is buy clean, where we buy the asset, where we don't have to do any renovations. We buy it clean. It used to work really well for SMSF because you have limitations under SMSF, how much you can do, how much money you can invest on renovations, etc.
Yeah.
So you buy clean asset, design it, furnish it, launch it on Airbnb, and makes it set and forget. Right. So the second strategy is the renovation. So you buy a rundown house on a good street in a good suburb, and then you put your love into it. Not only love, you have to put your money into it. But if you invest, there's a return on investment. So quick example, let's say if you do any cosmetic renovations, kitchen, bathroom, floor, painting, landscaping, if you invest about $50,000, you could expect about 2.5x returns within 3 months, which means the value of the property will go up in terms of the equity. You can refinance it. You can put the money in offset by redrawing from the mortgage. So that's a renovation strategy. So you hit the bird. So you hit the 2 birds with 1 stone. Basically, you renovating the property, you generating equity, and then you getting it ready for Airbnb.
Making it cash flow rich.
Making it cash flow rich. Yeah. Exactly right. The third strategy is value add, where you buy the property with a good land parcel, about 700 square meter, and then you run an Airbnb on front of the house. Let it be on Airbnb for about 12 months. But in the meantime, you work at the back. You work at the rear. What it means that you put an application into the council, you draw a plan with the architect, 3 bed, 3 bath, and then you put an application, DA application with the council, get it approved, and then whenever you have the funds or whenever your life allows, you can build at the back.
Yeah.
So that's the value add. Or you can add a granny flat, which we call in Tasmania is ancillary dwellings. So you can build up to 60 square meter, which is pretty much 2 bed, 1 bath. So that's strategy 3. And the strategy 4 is where we buy the land in a good suburb, and then we draw up the plans, and then we build a house on it.
Similar to house and land?
Yes, you can call it house and land. And now they're very, very hot cakes at the moment. And the reason I say this, after 12 months may budget, because negative gearing is no longer an option. So people are really inclined towards the newer houses.
Yeah.
So for example, we have bought so many houses in a suburb called Surreal, right next to the waterfront. They're really good on Airbnbs. We've got 1 house live running on Airbnb. It stays booked. The occupancy is sitting about 90%, and then you have negative gearing benefits. The property will you just let the property grow in the marketplace and keep making positive cash flow out of it.
Yeah. So with the 4th one, I was just thinking how great it sounds, because you are saying the customer can still get the negative gearing benefits.
Yeah.
the customer gets capital appreciation and the customer gets cash flow rich property.
Yeah, I'll do
Wow.
the numbers. I'll do the numbers, and that's we've been working on a lot of
Yeah.
deals at the moment. So let's say if you buy a house, if you build a house within $600,000, right? Let's say it's going to take 6 to 8 months, and we run it on Airbnb. Let's assume that property will make us about anything between $45,000 to $50,000 net for the investors after the management fee. The gross would be somewhere around $70,000 to $80,000. Take out the management, cleaning, maintenance, or other consumables costs. So you're positively geared before taxes.
Yeah.
So let's say if I borrow the money 100% at $600,000, that is $42,000 interest payments. And if I'm making $45,000 on Airbnb, that's about $3,000 positive or neutrally geared when you capture in the other holding costs. But when you do after taxes, you can claim a depreciation. So if I'm positively geared $2,000 before taxes and I add my cost, which is a depreciation on a $600,000, about $20,000. Now
New purchase.
On a new purchase, now I'm negatively geared $17,000. And then if I offset my taxes, let's say if I'm in a bracket of a 47% marginal tax rate, I'm going to get a tax refund of about $8,000.
Wow. Yeah. Yeah.
How good is this strategy? It's just a no-brainer. So I'm
Great.
positively geared before taxes, and I'm more positively geared after taxes.
Yeah, with the tax refund. What else do you want? Great
What
value.
else do you want?
Yeah.
And you don't have to lift your finger because you have professional working by your side.
Yeah. So you're saying that with one of the strategies, which I'm going to get back to as well, which is, I think, multiple dwellings, where you're able to create multiple income streams to the same block of land, essentially. So is that something that Jasper would help in getting the council approvals? Because we have dealt, I'm really new to this space, but I've seen investors not having any time. So do you think Jasper would be able to help in that capacity as well to get the approvals from the council and get the paperwork done for their second dwelling?
Yes, 100%. And that's why, again, end-to-end service.
Okay.
You don't have to lift your finger. The only decision you have to make is to work with us. And that's why we're doing this podcast, because we want to share this information with the people out there. And we're going to be very out and loud in our marketing moving forward so that we can share our value proposition. So exactly right. So I'll share a quick example.
Yeah,
We bought a property for our investor. He's a migration agent. He's a busy guy, right? He doesn't have time even to speak to us. He's that busy, right? We bought him a property in a suburb called Claremont for $510,000. What would you get in $510,000? So we bought a property for him in $510,000, 670 square meter land block. We invested about $25,000 on the renovation and let it run on Airbnb for 6 months. And at the same time, we started working on a DA application with the council to build at the back. He hasn't done anything. He's making positive cash flow from day one, once the property went live, and then we're working on a DA application. But one step back, within 6 months, when we did the revaluation of the property, that property is sitting at $620,000.
Wow.
So he's getting paid about $6,000 a month, and his mortgage is about his holding cost is about $3,000. So he's positively geared. Plus, he's got the growth, which is nearly $100,000 in less than 6 months, because we went to the market at the very right time when it was at the bottom of it. And now we're working on a DA, and it just got approved. And he's just sitting in his office in Melbourne, and he's just solely focused on his business, and he's letting us run with it.
That's what we want.
Yes, exactly right. So DA is approved, building permit has arrived. Now what we're going to do is we're going to build at the back. So we have drawn up 3-bed, 2-bath house, 130 square meter, because that's the demand. We are not building 22 square or 24 square houses in Hobart. That's not the demand. So we're going to build this 130 square, which is 13 square house at the rear.
Yeah.
It'll cost us about $400,000. And guess how much it's going to be worth when it's ready?
Tell me.
$600,000. A minimum.
Great.
The comparables are about 650, 680. So you are going to make equity of $200,000
Straight.
in 12 months.
Yeah.
And that's only possible because they have us alongside them
And the strategy.
and the strategy. And you have the appetite, obviously.
Of course. Yeah.
Yeah. So I'm really happy, and the guy sent us an email. He doesn't speak much, but it was so good to hear from him when he said, "Guys, done a great job and a great service."
Wow. Great to hear. So I'll quickly summarize as well. Thanks for walking us down through the 4 strategies that we have got. One is a clean buy, where you buy a good asset and run it on Airbnb. Of course, style it, furnish it, which Jasper does it for you. And second is subdevelopment, where you've got multiple dwellings, multiple income streams when you try and manage it. Third is, you said, renovations, where you're able to give some love to the property and money, and manufacture equity and give the property its true value back. And the fourth one is land and build. Like, we are able to get a good block of land in a growing suburb and develop it. So tell me which one's working best in today's market, and if there is a reason as to why.
Again, it depends on where you are in your investment journey.
Yeah.
But right now, the new builds are no-brainer.
With the negative gearing?
With the negative
Sure.
gearing, and because buying an established house, if it's negatively geared, it just doesn't make sense investing. So new builds are the way to go for now, the way things are going. And in that as well, we have developed a model where we taking care of everything. We have dedicated builders by our side. We have a dedicated architect. You don't have to wait for the council or work with the council for 8 months to get an approval.
Yeah.
We have system in place. So when you come on board, if you're looking for a new house, we'll build you a turnkey Airbnb investment property.
Yeah. Great. Now let's talk about a real example, and I would be more than happy to talk about the Claremont property because it would actually give a good insight into subdevelopment and as well as Airbnb cash flow at the same time. So let's get into the numbers. So what does the numbers look like for an investor? The question is coming from the lens that you said there are multiple dwellings. So are you able to get dual incomes, or does it still remain one income for the main dwelling? And if it gets booked out for an additional couple of rooms, then it gets booked out, or we can list it as 2 different properties on Airbnb as well.
Yeah, well, really good question. Look, when you develop at the rear, when you build something at the back, then it gives you so many exit options. The first option is, you sell the front of the house, which is an older house, and then you just keep the new build and run it on Airbnb or on a long-term rental, up to you. The second option is you sell both of the units and just get out of it, because there's such demand for any houses which is 3-bed, 3-bath within 600, 650 mark. The third is you hold both of them, which is your question.
Yeah.
So you run the property on, you run the front of the house on Airbnb, making an 8% yield. You run the back of the property, a new build on an Airbnb, make 8% yield. And the holding cost will look after on its own, and you'll be positively geared.
Yeah.
So
best of both worlds.
Exactly. So I'll just sum up the numbers. You bought, for example, this client of ours, he bought the property for $510,000.
Yeah.
He invested $20,000, $25,000 on the renovation. Let's assume it's $540, $535, $540, and then you add another $400,000 for the new build.
Yeah.
So his outlay is about $900,000. Let's assume $950,000. Now, in front of the house is making about $60,000 in rental income, and the back house is making the same. It's $120,000.
Wow. Yeah.
That's more than 12% yield. That's like a passive income.
That's where the positive feedback is coming from.
Exactly. Or he's over the moon, and we bought him 2 more properties.
Yeah, we did.
With a similar model. And they're currently going through the exact process what we've been just discussing.
Yeah. Which is great. We are able to do it for ourselves. We are able to do it for the busy clients. That's it. Now, one last question, which is what we hear from a lot of people every day. And I think as exciting, and from the investor's lens as well, and I completely understand because they've got their money involved and they just don't have the time to get into something that is too risky for them. So I'll just get to it. Isn't Airbnb too risky?
Not for us, I would say. Yeah, because we have a dedicated team. We've created
On the ground.
Yes, we've created a model. We've got a property manager. We've got a cleaning team. We got maintenance crew. We got a dedicated team overseas who's looking after the listing, optimization, pricing. It's a full-fledged model and an oil machine. So it's not risky for me, but definitely it could be risky for someone who hasn't done it before.
Yeah. Someone asked me this question that everything sounds exciting, but I think Airbnb has got a bit of a risk involved. And I was like, well, I get you where you're coming from. You've got your money involved. And I was like, what do you think about negative gearing? Like, you are negatively gearing your property for 15 years and you're calling itself a strategy. Yeah. So what do you think about that? And they were like, yeah. No, and I was like, you're getting money at the end of the investment, which is great. That is all what you want.
Yeah. You know how I answer it? I say, if you're driving on the road, isn't it risky?
Yeah.
Life is risky.
Tell me.
But there should be a mitigation plan.
Yeah.
And that's what we have. We have dedicated resources who know what they're doing, and we just do it again and again, rinse and repeat.
Yeah.
Yeah.
Lean team.
Exactly.
Let's do a fun round, which is called fact and fiction. I've got a few pointers, and you just tell me if it's a fact or a fiction.
Yep.
A new build gives bigger depreciation than an established one.
A fact, for sure.
Short-term rental can out-earn long-term on the same property.
100%.
Yeah. The right team can furnish and launch an Airbnb in 2 weeks.
We've done it for more than 30 properties.
We just addressed it.
Yes.
Sorry.
So
it's
yes, within 2 weeks.
That's right. We can do it in 2 weeks. You can't get a positive cash flow property in Australia in 2026.
It's fiction.
Let's not talk about it. Tasmania grows slower than the mainland.
Fiction.
Negative gearing is the smartest tax strategy.
Not anymore.
Exactly. You need a massive deposit before you can even start.
Not really. Banks are pretty good. You come from mortgage background.
Yeah.
So how much do you need?
Bare minimum. I mean, of course, there are strategies. You can actually get into it. Like, what takes more is like you have to just make your mind that you have to get into the market. And I'm sure, like today more than ever, there are so many creative ways to get into the market. So I don't think, of course, like you can't say that I've got 5 to 10K and you want to get into the market, but it's not that you have to wait for
forever,
or just you know that you have to wait for 20% deposit. That's not the case anymore. Okay, government spending and tourism are propping up Tasmanian rental demand. Is that a fact or a fiction?
In short-term rental, it is. Yes, it's a fact. Yeah.
Yeah. Positive cash flow properties are always ugly houses in bad areas.
Ugly houses?
Are ugly houses.
It's a fiction.
It's a fiction.
It has to be good-looking houses, isn't it? For an Airbnb.
Yeah. And now that we do a lot of interstate investment, tell me, you live near your investment property to keep an eye on it. Is it mandatory? Like, is it like people say that you have to live near your investment property to keep an eye on it and make sure it's running well?
No, I mean, that's why you need people like us. And we give you the confidence to invest interstate so that you don't have to go and do anything. And that's why I always say, and I that's a value proposition, and that's how I justify what I get paid for, that you don't have to buy your house in your backyard anymore if you have me by your side.
Yeah.
So you don't have to.
The strategies, right? Yeah. And that's a good one. Airbnb's regulated out, not worth starting now.
No, exactly not. It's a fiction.
Let's end with, what's the biggest myth about property investing that costs people the most money?
Just sitting on a decision making. That's what I see after speaking to a lot of investors.
Are they overthinking a lot? A lot of misinformation in the market, do you feel?
Yeah. People who just don't make decision, I think that's costing them the money. And people who make quick decisions, that's who move quick.
Yeah.
Those are the ones who's making good returns on their investment.
Yeah. And for people who are listening and following our content, so what's the most common thing, like for people who are trying to do it by themselves to learn and to grow? So what's the most common thing people get wrong about Airbnb specifically?
Look, they feel there's too much work, right? So it's the opportunity cost. I look at it, right? For me, when I started Airbnb, I looked at as a positively geared option. But a lot of people don't start on it because they feel there is a lot of work.
Yeah. They overdo it.
Yeah,
making
they
it perfect.
overthink it, or yeah.
And what kind of an investor is our strategy ideally for?
People who have the risk appetite, who understand who understands our value proposition, who understand how the returns are. People basically who have a risk appetite to understand. Yes, things will happen. Everything will not go per the plan, but yes, you have a good team by your side who are dedicated, who have a good model, and who can take care of you end to end.
So now is the best time. Tell me, I'm coming back to my first question. Back to the 700K from where we started. Now everyone's heard the whole thing. Walk me through exactly what you would do with my 700,000 if I asked you. It has to grow and it has to be cash flow positive.
Again, I'll buy your property in a strong growth corridor where we're going to see good capital growth in the coming years, like a double-digit capital growth. I'll design the property for you. I'll furnish it. I'll launch it on Airbnb and manage it end to end for you. You as an investor will get paid third of each month. That'll cover your holding costs. Plus, it'll leave you something on the table.
And after hearing the whole podcast, being here, I cannot wait for it.
It's a no-brainer.
100%.
Yeah. So I encourage people are looking to invest, and they've been sitting on the fence, who've watched us. Get in touch with us, and we're ready to help the next set of investors. So cash flow properties are no longer good to have an option. It's the necessity.
Yeah, definitely. Well, thanks, Gary. Thanks for everything. Head of strategy at Jasper Advocacy. Breathing in and out the property all day, every day. So yeah, thank you. Thank you for walking us down your strategies, the end-to-end process. It's a really valuable conversation that we had.
My pleasure.
Thank you.
Thanks for having me.
Gary. Thank you.